Morning, everyone, and thank you very much for joining me. This is the morning market review. It's Wednesday and it's the 6th of December. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address, of course, is rshaw@fxcm.com. I'm going to go ahead and bring up our high-risk investment warning. I'll keep this on screen for a few moments. Hey Raj, good morning to you. Good morning, James. Pleasure to have you on the webinar. Thank you for signing in. All right, just going to keep this high risk investment warning on for a few moments longer. And here is our market commentaries disclaimer. And just taking a look at our references, MarketScope 2.0 and TradingView.com. All right, just want to go ahead and bring up TradingView. I was taking a look at the non-manufacturing PMI that came out yesterday. Came out at 52.7, above 50. Above 50 is expansion. So the US being a services-based economy, showing some expansion. And then the other bit of information, the other information that came out yesterday, the job openings or JOLTS data, and that came in lower than anticipated, so it's moving downwards. And we can just adjust this as such. Yeah. All right. So basically, it's kind of Goldilocks data at the moment. We're going to look at the we'll look at the real rate in a moment, but no, the job market is cooling, so job openings cooling, but we're going to get the non-farm payrolls on Friday. It's not collapsing. Services sector still expanding. Let's just go ahead and take a look at the real rate. So we'll just go through to US 10-year minus the break even. All right, just take this off logarithmic because it is percentage based. And let's just take a look at this on the daily. All right, so we did actually see some, this is a strange candlestick from yesterday. What happened is it gapped open, it gapped up on the open. And then I think as the data showed that sort of Goldilocks type of economy, it started moving down. You know, we do have this zigzag. Let's just change the color there because it's red on red. Let's just make it green. And you can just see the zigzag. And the real rate coming down. Now, one of the things that we are looking for is that signs of economic weakness. We didn't get that yesterday. So the data here, by and large, looking Goldilocks. Let's take a look and see how the US dollar acted. We're going through to MarketScope now. Okay, let's just go through to the USD. And again, we'll do this top-down analysis where it's come down below the 30-week exponential moving average. It's broken the trend line. So there is, when we expect some weakness on the weekly bat, this week there is this blue candlestick. So we're looking potentially at resistance levels to see if there is a rally in a downtrend. You go through to the daily chart, and I think the fact that that Goldilocks type of data has come out, I think, is making the resistance levels quite persuasive, quite compelling. So let's just take a look and see what's happening on on the lower time frame, I'm still looking to see if we have this kind of lower peak here, right? And I think we may be getting that opportunity given the data that came out yesterday. Let's just take a look at the resistance levels on the hourly. Okay, let's clean this up. There's too much happening on the screen for us to make an assessment. Let's just clean it up. All right, now we've got the bearish crossover on the EMAs. We've got the bearish crossover on the stochastic. Okay, so we've got the triggers that have pulled, and by and large, just keep an eye on the movement towards that lower quintile. Once we hit that lower quintile, if we hit it, then there's a good chance that we've got some sort of swing going on here. So if we kind of just bring this across, it would be like this: 1, 2, 2, 3. This is quite a deep connection. I'm not going to put the fibs on. My system's not behaving particularly well when I put fibs on. It is jamming up. So we won't put the fibs on, but we're looking at a fairly deep retracement there. And we want to see now if we kind of get this movement down. The fact that we got this seemingly Goldilocks data, I know I'm sort of emphasizing it, to me suggests that we potentially going into some sort of risk on move today. Let's just take a look at the calendar and see what we can expect out today. So ADP not really going to be. I don't think there's much that we're how much we're going to see today. All right. Okay. Let's take a look at the risk markets. Okay, so if we do get this movement down over here and over here, then of course I would expect the risk markets to be constructive. So we'll go through to the we haven't looked at NASDAQ for a while. Let's bring up NASDAQ. All right, and this is our NASDAQ weekly chart. It's above the 30-week exponential moving average. The 30-week exponential moving average is pushing up. We've got this trend line break in the RSI. RSI is above 50. Go through to the daily chart here. It is in neutral, but just bear in mind here that we had this overbought condition here, and that overbought condition put a cap there. So I kind of see this pullback as healthy. 1, 2, 2, 3, and now potentially a movement up here for today. Let's just take a look at the hourly chart and see if there is support. So we'll go down to the hourly chart. Okay, we're quite a bit away from a support level, but we are in our upper quintile. And if we hold the upper quintile here, then we'll get the legs there. So the momentum on the NASDAQ showing quite strong positive momentum. Again, given the data that we saw yesterday. Let's just take a look at SPX. All right, just bear with me. Here's the SPX. We've got a similar type of analysis. Let's just go through to the weekly. It's above its 30-week exponential moving average. The 30-week exponential moving average has turned up, and we've got the RSI above 50. go down to the daily chart. Again, we were overbought here. That seemed to me to put in a ceiling. Okay. The fact of the matter is that we are now showing moderation. We're below 80. And I just want to keep an eye on the hourly to see if we're going to get some sort of movement to the upside. So we'll go through to the hourly, and the R1 level, potentially the support level. So we're looking, let's just see if R1 holds. Take a look where the stochastic is. Stochastic is in our upper quintile, and if it holds there, we're probably going to get a nice movement. So S&P 500 and NASDAQ looking fairly constructive. Let's just bring up DAX. DAX is a different story. DAX has still got that frothiness, that heat to it, which I don't like at all. So if we just go through to the DAX. Okay, just bear with me while the DAX is downloading. And here you can see the DAX has got, I think, much more of a challenge than the US markets. And I think the challenge is really because of the fact that we're at this resistance level on the weekly. I think that this is a positive looking chart. I just wonder if there is going to be some sort of kind of resistance there, because go through to the daily chart, we still got these overbought levels. So I'm quite inclined to look at the risk markets, but I'm more inclined to look at the US S&P 500 and the NASDAQ than the DAX, just because I don't like this overbought condition. And I'm not sure when this overbought condition is going to clear, but the whole reason that we have got the RSI in here is to warn us when there's potentially going to be some froth. Okay, so happier with the US side of the Atlantic than with the European side of the Atlantic at the moment in terms of the risk on type of moves. I'm going to go now down to gold. I just want to do a gold analysis because gold has been looking good as well. And if we're going to get some sort of drop in the US dollar today, it remains to be seen. But if we do, then potentially gold should be on our radar as well. So just going to go ahead and bring up gold. Okay, so when we take a look at gold, what factors are causing the froth in the DAX? It's actually the industrials. It's not just the DAX. The Dow Jones also is overbought at the moment, Anna. There's just been a hell of a strong run in the industrials at the moment, and I think it's ripe for banking of some profits. So I just think that it's run, the November rallies just was exceptionally good for the industrials. And I think that the markets are now showing signs of being a little bit toppy. And I think that the traders that are sitting in the money probably going to bank fairly soon. So it's really the industrial side of the market that's got that heaviness to it. Let me know if that answers your question. In terms of gold, gee, this is such a strange candlestick that we're getting for this week. I really like the gold chart, how it looks. It's actually missing a label here, so we should put in a P there for peak. So we've got a peak and trough, then we've got a higher trough and a higher peak. This is really sort of textbook stuff. We're above that 2000. I think that 2000 now is a support level. We've broken the RSI. We're above 50 on the RSI. The 30-week EMA is pointing up nicely. And we kind of pulled back, but we're still in zone 1. This pullback here, I think, was fair. Again, this was fair. It hit that overbought level. It came down. Now that overbought level is cleared. Okay, so we can start looking for at supports. And when you take a look, James saying, when we say Goldilocks, we're meaning about right? Yeah, I think it's, when I say Goldilocks, basically in terms of our real rate, remember we're talking about, is the real rate coming down because of disinflation, or is the real rate coming down because of a weakening in the economic data? Well, there is showing some sort of moderation in the jobs data, and I think that helps with that disinflation. But we're not seeing an outright weakness in the PMI. That's perfect. So it's looking pretty good, pretty much Goldilocks, James. Does that answer your question? Take a look now at gold. Now gold's looking really interesting as we start the day. We've got the EMAs showing, we've seen the EMAs pushing northeast. We've got the green 5-week on top of the orange 10-week. Here's the crossover in the stochastic, and we're starting to head towards that upper quintile. So it looks like gold may get a bid to it today. And remember, if it gets a bid to it today, it's because we're seeing that dollar come down. Why are we seeing that dollar come down? Because the disinflation, which is effectively what we want to see as opposed to economic weakness, that's the Goldilocks there, right? That's kind of what we're seeing at the moment. It looks as if gold about to get the bid as well. So that's very interesting. We'll just take a quick look at the US dollar again, just to see how it's setting up just before markets open. So you can see that we've got the bearish formation in the EMAs. All right. One to keep an eye on. I'm not sure how this is going to play out. We looked at it briefly yesterday, Euro, US dollar. So the US dollar to me does seem to be as if it's weakening, but so does the euro. So how do we square that? The euro weakening relative to the US dollar. So first of all, we just got to watch to see if it moves into zone 3 or if it comes back into zone 1. We're in no man's land here, and I think that's the key with the euro. It's in no man's land. The euro, the ECB area, markets are talking about the ECB is going to be the first central bank to cut. And I think that's what's been reflected in the euro. If they're this first central bank to cut, they're relatively more dovish than the Fed. And that's really what we saw yesterday. Remember what we did yesterday? We did the 2-year spread between the German and the US, and you can just see that on a relative basis, it's just looking much weaker on the euro side. Okay, so just keep an eye on that euro. If the dollar is weakening, I'm not sure euro is going to come into play. We're probably going to have to look at other majors to see which is, remember, we want to measure strong versus weak, not weak versus weak, strong versus weak. That's kind of the idea there. All right, we're going to have to conclude at this point because we've got the Crypto Minute next. Thank you very much for joining me this morning, and I want to wish you a good day ahead. Please join me for the Crypto Minute if you'd like. Otherwise, we shall speak tomorrow morning. Thanks very much, guys. Cheers.